Hello, this is Mike Swanson, Wall Street Window. I got a very special guest with me today. I'm speaking with Chris Vermeulen, who runs the website, thetechnicaltraders.com. Chris has been around for well over a decade in these markets and commenting online with a very similar approach that I have to analyzing what's happening and trying to adapt and change with the trends. How you doing today, Chris?
I'm good, Mike. Pleasure to be on the show.
Thank you. Well, it's very interesting year so far in the markets, no doubt. The everyone's been obsessed about when is the Federal Reserve going to lower interest rates. We've seen gold firm up. Bitcoin's gone crazy above 71,000. Nvidia's gone crazy. So a lot of people, I think, are jumping into the markets with this sort of excitement. How do you feel about what's going on?
Yeah, I mean we're in a bullish market. I wouldn't say it's a raging bull, whereas we're seeing every stock explode and sectors run hundreds of percent. Most stocks and sectors are really struggling. They're not really near the highs, but when you look at the market from a really high level, which is the general public, what the general public sees, they see the indexes like the SP 500, NASDAQ, all-time highs. They hear about the high-flying tech stocks, Nvidia, all that stuff. And so the general public thinks we're rocking. And while the market is going up, the major indexes, it's really muscled higher by a handful of the big techs, as we know. And most portfolios aren't really going up that much because they're spread across a bunch of stocks. And the Russell 2000 is a good view of that. It actually I can share my screens here and just show a view of what a lot of majority of stocks are actually doing, which is we can see here. If I zoom out on the daily chart, you can see the Russell 2000 has really just been trading sideways in this big range. It's getting to the upper end of that range, but the majority of stocks are struggling. And if we look at the RSP index, this is the equal weighted SP 500, we're really just coming up and hitting a double top for the SP 500. And same if you were to look at the total market ETF, which I don't have on here, it's actually not even near the a double top yet. So everybody's thinking we're doing really well. The big techs are pulling the markets up and people are starting to pile in. We are seeing money move into small caps and growth stocks. The Bitcoin, Nvidia is really sucking a lot of people in, saying, you know what, this rally's leaving and I have to get in. A lot of people missed out on the big move last year and because they were thought the market was going to go down. And we're hitting that breaking point right now, I think, where we're seeing everybody finally give in, and meaning they're giving up on the market going down and they're starting to just buy long into the market. And I'm seeing the same type of feeding frenzy that I saw back when Bitcoin topped out back in the 60s. And then it fell all the way down to 16,000, which is I'm seeing people buy NVIDIA on their mobile phones through an app. It's their first stock because their friends own it. And that is like a huge red flag to me. And it's going to be interesting to see how things unfold because the markets are moving up, but I believe it's a very weak market. There's not a lot of support. Once the tide changes in the big techs and they're selling, it's could get pretty ugly.
Yeah, I see where I live. Like people on Facebook, I don't where people I know, people in the area I live in are posting screenshots of their crypto profits and Nvidia profits. And the last time they were doing that, was in the first quarter of 2022 or
Yeah.
2021, whatever it was when that game stock and all that stuff was fascinating people. So, whoa, but hopefully this can continue. Uh,
Yeah, it's interesting. I posted this in the members area last night. One of our members posted this in a comment. Was the Barron's cover here talking about bet on the bull. Stocks look poised to keep rising thanks to the strong economic growth. Like this was like, a week ago, which these things can generally signal we're getting close to the end. Everybody now is just turning super bullish and they don't want to fight the tape or the trend. They're just going to say, hey, we're in a bull market. Everybody get in. So they look good. But this is a huge red flag when it is, front cover of magazines saying, the new bull is here.
well, what would have to happen in the market to make you think that the bull is actually over?
I think there's a lot of things that need to go on. I think the stock market to me is primed and ready for like actually another really big rally. I think we could see a squeeze over the next couple weeks, maybe into May. Seasonality wise, we see the seasonality chart. The markets like to run up into May. Typical saying is sell in May, go away. In fact, if you look at the seasonality chart of last year for the SP 500, we had the exact chart pattern. So if we were to pull up the SP 500, just for last year, we saw this. The market rallied up, topped out May, June, July, sold off to the end of October, and then went into that holiday rally. Here we are right here into March. I think we're going to see this market continue to suck investors in. And the higher it goes, especially if it picks up speed and we see growth stocks have a big pop here, that to me is going to be like the last push. And then I want to see some big distribution selling going on. I want to see some big reversal bars, just like we saw in NVIDIA. We're starting to see some pretty big volatility in the NVIDIA chart where it has a huge gap up and then gets hammered on big volume. I've seen 2 or 3 of these days so far in the stock market, like in the SP 500 and the NASDAQ, where we had big volume and everything got hit to the downside. So to me, the perfect storm is the SP 500 hits new all-time highs. That to me is the overall market tide. We got that. Now we need to let the rest of the people get sucked in who aren't in the markets for the market to really just, it likes to apply maximum pain. So it's going to try and get everybody in near the top, which is FOMO. People feel like they're missing out, so they get in. And then we start seeing these distribution days start to pick up. We start to have more of them. We'll start to see the tech sector, which, believe it or not, from with my strategy back in November, we had a buy signal for the SP 500. We also had a buy signal for the NASDAQ, and both of them are up the same amount percentage wise. In fact, the SP 500 is now starting to outperform the NASDAQ. So the big tech and growth, I feel like, is slowly running out of steam. And that to me is a red flag if the SP 500 starts moving forward. So I'm looking for big distribution days. I follow price, so I don't ever try to pick a top or a bottom. So I need to see a breakdown on the charts. We need to see sentiment shift and money flowing out of the markets. And when that happens, then we'll focus on playing the downward trend. So I really just need price to break and confirm that we're in a downtrend, which is lower highs, lower lows, money exiting the stock market, and probably seeing money move into defensive sectors. It could be utilities, that we could see money move into precious metals as well, and Bitcoin. This is a window where I think we see precious metals do really well. If we look at gold and we look at the monthly chart, we're in this scenario very similar to what we saw we went to a kind of a multi-year consolidation with gold back in 2016 or 2006, 2007. And then we saw miners gold have a very strong rally just as the stock market was on its last legs. And I believe we started a new super cycle over here. We had a new super cycle start back over here. And we just had a multi-year consolidation, and now we're getting this push up. And I think savvy investors are moving to physical metals. I think we see how weak the banking system is. Banks can, even though the Fed says the banks are, stress tested stronger than ever, they're super brittle. It's total BS. And so people are moving into alternate ways to store value, Bitcoin and gold. And I think we could see these rally up. I got about 2,300 to the upside for gold here over the next the next few weeks potentially. And silver will follow suit. Gold miners will follow suit. So we're in this phase. And then I think we're going to run into steam, see this distribution selling in stock market. We're going to see it sell off, and it'll probably pull gold back down to some regard. And then I think we're off to the races. This was the 2008 pullback. I think we'd have the 2024 or 2025 pullback. And then we're off to the races where it is one of those opportunities of a lifetime in the miner space. Silver goes ballistic, all those things. So all these big trends are unfolding. And I like gold right now. I still think there's a lot of actually upside over the next potential month or so for gold, silver, and miners. But then I think we're going to get into some volatility.
Yeah, in a few minutes, I want to ask you about your book, but I just want to bring 2 points up first. One, I'll just say, you know, both of us do less short-term trading than we did when we started out.
Mhm.
And I've held a 14% core position in my portfolios in just gold and silver ETFs. And a few weeks ago, the day, the Friday gold rallied like 50 points, but before it closed above 2,100, I boosted that up and I got about 20% now. But the chart you showed about the seasonality, it's kind of interesting to me because if you think of a lot of times the markets trade on something like buy the rumor, sell the news, or
Mhm.
and we have the interest rate cuts that are supposed to come later this summer in June or July now, and then after that you have the election in November, and often the market tends to in election years rally into the summer, then fall into the election over uncertainty over who's going to win.
Mhm.
So I wonder, that would kind of, if we rally into the rate cuts, then sell into the election, it would match the seasonality trend there. So I think
Yeah, it would. Yeah. It's going to be interesting to see how things play out for sure.
I have no idea who's going to win the election, but um, as far as navigating these markets with your money, could you talk about a little bit how you do that and your book asset revesting?
Yeah, sure. So last year I published this book called Asset Revesting, and really I'm trying to expose the world to a new style, a new category of investing. So you've got the two core strategies that either you do one or the other or both, which is the buy and hold, which is doing absolutely nothing. You're riding out the roller coaster. You never see people with the buy and hold retire 20, 30 years younger. It is a time strategy, high risk strategy, especially if you're older, because we could go into a multi-year correction and you could lose a lot of your money, right? When you want it and need it the most. And then you got the other extreme, which are active traders. And there's all kinds of studies across North America and Brazil and Taiwan that have studied active trading. And if you're an active trader and you trade for 300 days or more, they have proven that 97% of active traders lose money. And I get it. You and I have been running newsletters forever. I've been doing it since 2001. And it is a rotating door. You can literally hand feed people quality setups with everything you need, and they find a perfect way to not get out when they should. They don't get out of losers. They hold on to winners. They don't scale out. I mean, people are absolutely great at really screwing things up. So those are the two extremes that everybody does. So what I do with asset revesting is totally different. We reinvest our capital only into one asset class at a time with our active investment capital to whichever one is favorable. So for example, the stock market. Doesn't matter if you own 100 stocks or you just own the index. If you own stocks, the stock market is one asset class, it's equities. So when the equity market goes down and we're in a bear market or recession, almost all stocks go down. There's no point in holding an asset class if it's going to go down for a year or 3 or 4 or however long, right? So my belief is, hey, as an investor, we want to own things going up or at least just paying us interest. And so we just move out of the indexes. I only focus on the indexes because I don't get into actively trading stocks. And so we'll sell the indexes and we'll buy bonds or we'll buy the US dollar index. And as the stock market falls out of favor, I have a hierarchy of positions that have lower volatility. So as the markets get crazier, we step aside and we move down this hierarchy to whichever one is trending up that meets our risk criteria, meets our trend analysis, and then we'll slide into that asset class. In 2022, was the year of UUP, the US dollar index. It rallied 18%. The biggest pullback throughout the year was about 4%. It is a super low volatility, beautiful trending asset class to just get out of equities and sit in it and watch your capital just slowly inch its way up in a very controlled way. So that's what I do is we just invest our money in the stock market or whatever asset is meeting our criteria, and we just rotate. There's 5 to 12 of these trades a year. I always like to explain it. I'm a surfer, so I always like to explain it like, hey, if you're walking down the beach on the ocean and you look at surfers out past the break, what are they doing? They're out there waiting for a clean set of waves to roll through. And that's what I do with the stock market. I sit back, I wait, I look for these beautiful, powerful swells coming towards us, trends in the markets, could be a sector, could be a currency or whatever. And we hop on the one that fits our criteria, fits our strategy. And then we ride that wave for the trend. And the nice thing about catching something strong is when it starts to run out of steam, we can clearly see that. So we can carve off that wave. We can start trimming profits, move our stops up, and know that, hey, things are coming to an end. We better see where we're rotating to next. What asset will we be looking at? And so that's what I do. We just catch these waves. And this sounds really counterintuitive, but we sit in cash roughly like 30 to 40% of the time of the year. We sit in a BIL ETF and we just collect right now it's about 4.5%, 5% interest. But it pays it out monthly in dividends, which are a lower tax bracket. And so when the market's not favorable, we're just collecting interest. And so the market could be going down or going sideways, and we're actually still growing. And it's all about consistency. I'm not looking for grand slams, only trade ETFs. We have one position on at a time. I mean, it really is the complete opposite of active trading and doing nothing. It's just enough to navigate the tides in the market, more or less.
Well, I read a book that you wrote years ago. I think it's over 10 years old. I haven't read this one. So if I want to get a copy of it, where do I go to do that?
Yeah, you can go to anywhere, Chapters, Amazon,
Oh, okay.
yeah, it's everywhere. So yeah, feel to get that. And yeah.
Okay. Yeah, I'm gonna do that. Well, thanks for taking the time to talk to me and everyone else, and hopefully we'll do another video much sooner than than we had the last one that we did.
Sounds great, Mike. Appreciate it.